right, let's jump into it. Bit of weekend wrap, weekend review. Where we are, 11:37 on Saturday. It's 5th of July. So look, it was pretty quiet sort of end to the week for us and that because we had the US obviously on their sort of Independence Day holiday, and really we had a little bit of a sort of movement around Asia, a little bit in Europe, but not really anything. And then just as expected, with these sort of holidays, it's always a little bit. It could go one or two ways. One, and probably more often than not, it's just dead quiet. But otherwise, you may get some runners that just continue because you've got less people at the actual where are we going here at the actual desks and that. But as we saw, it was just quiet to sort of finish things off. So just going to make this a sort of quick one. Just get through these bits of news and charts, see if we can pick out any sort of trades for the week, any sort of themes, and see how we go from there. So, look, in terms of news at first, it looks like a fairly sort of quiet sort of start to the week. And now we've got job advertisements, a little bit lower here, not really anything that's going to be impacting the market too much. Big one sort of on the Tuesday for the Aussie, obviously, we got the cash rate. This is pretty much as priced in probably as anything could be, and that they've been talking about it for a while, and that we've got all the sort of data sort of pointing in that direction. I think this is pretty much a sure sort of thing. So just as expected with these sort of things, we'll get the cash rate coming in there, and then we'll get sort of obviously the press conference to sort of see what Bullock's got to say afterwards, to sort of get a bit more of an idea. Are they sort of pushing for more towards the end of the year? Because I think at the moment, like the talk of the town kind of thing seems to be 75 base point towards the end of the year. Obviously, if we cut 25 base point now, that leaves most likely two more 25 base point cuts through to the end of the year. So look, it's hard to sort of say, and I'll cover this when I get to the Aussie, but because obviously, typically rate cuts, they're not. I mean, the textbook sort of way of these things working is they're not good for the currency. But if they're sort of thinking, okay, rate cuts are coming, Aussie's still at its kind of 2 3 month highs, and sort of consolidating around the top there. I do think that it's probably going to come a little bit under pressure in that. It didn't have a great sort of Friday, even though it was a little bit quiet. You can't really put too much into it. But it's interesting to see how much of that is already actually priced into their sort of movements at the moment, because if they're already sort of accepting the fact that this is happening and holding it at the top, that might actually release a valve which could see a little bit of an upside push, as sort of counterintuitive as you sort of would sort of think that may be that with the actual price action. Moving forward, we've got trade balances. Be interesting to see how these guys sort of tick on. It's not going to be anything that's going to be moving the market of that. Obviously, we had Aussie out this week, where our trade balance and that we sort of dropped down on imports and dropped down on exports and kicked right up on imports, and that just gave us quite a hefty miss. And that's the thing. We've got a little bit of weak data with these sort of things, so it'll be interesting. Across to New Zealand on the Wednesday, and they've got their rate decision. Looks like they're holding. They've come down quite hard. Can we see any difference here? Last results. I didn't realize this last show. You can see how they've gone with theirs, and see like this in New Zealand. They got right up to 5.5 and that, so they've cut quite aggressively, and they're already down at that sort of 3.3. So that'll be interesting to sort of see how this one plays out. That was last. Oh, that's interesting. I've never actually used this, where it sort of takes you back and forth like that. Interesting to know. Anyway, so yeah, looking to hold. Nothing really too exciting with that. We'll sort of see what they have to say, but I mean, it's across New Zealand. Sometimes you get a bit of proxy flow when you get these sort of like kind of what I call paired currencies. So Aussie and New Zealand, Euro and the pound, Canadian dollar, US dollar, these kind of things. So they can kind of move together. Not move together necessarily, but get a bit of a flow, proxy sort of flow with these things. That sort of takes us through Wednesday, and again, there's not a great deal. I'm not overlooking anything. We've got some RBA speaker people here, but again, this kind of stuff's not the same as like when you get these Fed speakers. These Fed speakers this week, or the last 2 weeks, that Waller and Bauman, or whatever her name was, that really impacted the market, and it proved to be completely unfounded. Obviously, we saw that with the sort of data coming out. So we had obviously the jobs reports coming out this week. beat on the jolts, absolutely smashed on ADP, and then sort of beat on NFP within the unemployment rate dropping and unemployment claims also dropping. So, it's not really, I mean, as much as these people saying, hey, look, we could cut in July, I think that's pretty much off the cards in that at the moment. So moving forward, again, look, it's looking overall, apart from that, cash decision and that on Tuesday for the RBA, it's looking pretty quiet. We got the minutes again. Look, because you get so many Fed speakers, these kind of lose a little bit of their impact. It's not like, oh my God, well, we got to hear. I mean, we're seeing, as I said, like we heard, as I just said a second ago, that Bowman chick, the Waller guy, and that we've heard from a couple of the other sort of members of Fed who have or come out sort of counter to those two. Those two seem to have gone a little bit rogue. I was actually having a look. Typically, given their past comments and stances, they've typically been a bit more hawkish. So, for them to sort of flip a little bit more dovish, I think is what was more impactful, was what they had to say. Moving forward, unemployment claims, as I mentioned a second ago, this seems to have stabilized a little bit. As you can see, it seems big drop. It was coming up here for a little bit, and this is when the people were sort of talking, and they're like, "Oh, look, we're, unemployment claims are they're coming up here, we've got to get in trouble. It's going to be sort of like, sounding some alarm bells." Well, this is what actually technically 3 weeks in a row coming down actually, and quite significant little drop offs there, another 10,000. So. That'll be something to keep an eye on, and that it's just a good sort of thing because this one's weekly as well. It gives you a bit of insight in that. Um, just on that sort of thing with the employment, I think I don't quote me on this. I'll have to have a look at it, but they recalibrated like all the numbers I think in August. So what I mean by that is last year they they came out. It's more to do with like sort of NFP and this kind of thing and that, but they'll sort of say, oh, we tally up all the numbers because everything gets revised every month. So, hey, like as in we had, what do we have? Like, 147,000 this month, this month for the NFP, and then maybe next month it'll be revised to 110, or maybe it'll be revised to 170. You know what I mean? The numbers are always off, and then they do one big recalibration. And last year it was 800,000 jobs overestimated. And this is after they've supposedly, like, so, they've got the initial report. So there we go here. It makes sense if I'm sort of pointing it out. But, you got your initial number with the NFP here. Where are we? 147 here. And as you can see, the little arrow here, so it's revised 139 to 144. So, even after you have that initially last month, they put out 139. This month they put out 147. They revised last month to 144. So they've already had time to revise it. And what I'm saying with this is that even with all that stuff and revisions and everything, they actually sort of said, oh, you know what? We actually overestimated or overcounted. There wasn't even an estimate. These are supposed to be actually reported numbers. We overreported 800,000 jobs, which is quite a substantial amount, obviously, even if it's over a year. And it just takes away a little bit of the credibility of these kind of actual numbers. But this is the game. Like, I mean, end of the day, whether the numbers are real or not, this is the job as a trader is more so to, trade the numbers that they sort of put out. And okay, it's a bit hard when you can't really expect or believe these kind of numbers. But, it is what it is. The number comes out, the market reacts. You need to react with the market reacting. So, that's where the analysis comes into it, and the sort of how is the market going to react? Well, at least with a sort of a trader and particularly short-term in and out trader, how's the market going to react with a strong number? How's the market going to react with a weak number? What does it actually mean, underlying thing? If we find out, as I say, I think it's in August, so next month, that you know what, they've actually overestimated another 500,000. Well, we can see what the market does, and I'll have a look into that because it was 800,000 last year, and I'll dive into a little bit how the market actually reacted to that number when they did do that sort of recalibration with it all. Anyway, on with the news. As I said, unemployment claims 233, so holders, we haven't got any expectations or anything yet. And then through to Friday, not really a great deal. A little bit of Canadian data, unemployment rate 7%. That's pretty high. That's very high, actually. I mean, we got Aussie in that sort of around, I think 4.1, 4.2, I think we are at the moment. It's been 4.1, 4.2 for a while, which is another reason why, they're sort of thinking, hey, look. Anyway, sorry, what was I saying? So 7%, that is actually very high. As I said, yeah, we're around low fours. The US, as we saw, that came down to 4.1, I think they had there as well. So yeah, quite high. Anyway, so look, all in all, pretty quiet on the news front, except for RBA on the Tuesday. I flicked over, we got PPI and CPI out of China as well. China's an interesting one. I'll get to the chart in a moment and explain that a little bit more. In that, so jump onto the chart. So we got DXY. Look, I've been covering this, and obviously, sort of through the Friday, not really much happened. So it's not really sort of new developments to sort of say. It sort of actually didn't get a perfectly good flow on from that big push off NFP. That was the first time we saw one of these big candles, at least northwise, in a while, and moved up very nicely. Sellers came in exactly on point, pushed back down, and then obviously, as I said, sort of, this is through Asia, and then once we got to the US, it's just sideways. So I thought maybe you might try to hold this channel, maybe this little pullback channel. None of this stuff's really relevant with it all. It didn't really seem to hold too much. The fact, actually, what I will sort of say with this though is this is a good example of sort of how I say with these sort of falling resistances and channels, you want to see these kind of moves when they're coming out of the channels. If things sort of come out and then sort of just dribble to the side, there's no sort of like, oh my God, the market's really looking at this. Oh, it's lost the momentum. And if this had just gone boom and then smashed down here, fine. People are sort of trying to pay attention to it. The fact that it just dribbles out to the side means that the market's not looking at it and it's just kind of obsolete. So hence the sort of, delete of these sort of things here. I'll keep this top one in here just for the sake of it at the moment. And we can sort of see what happens. So I think sort of like, if we sort of maybe, is there anything over here we can sort of say? I mean, if anything, that's probably a little bit more of a sort of channel. But again, look, Friday was so quiet, I wouldn't really put too much on anything with that. This is just mainly just to sort of see if we do push up here, where could we be going? I still think these gaps are probably your better targets. I think the fact that you sort of came into this first level here, sold down, that's fine. Chopped through it, came into this level here. It might take a little bit more, who knows, but to get through this area here. But I think this again is going to be an area where you're going to get a little bit more confirmation that we could see a little bit more of a squeeze to the top side. And as you can see, look, I mean, we've had periods of this on the way down as well, this kind of period through here, just before this was that 99.4 level. God, I was trading this point here and I'm like, yeah, 99.4, that's our big breakout level. It's our big breakout. Shorts are going to be sweating. Got to 99.4 and absolutely pulverized. That's when that Bowman chick came out yapping on about possibly cutting in July as well. And down we go, down we go. But look, it seems to have stabilized a little bit here now. If we get back onto a slightly higher time frame, we can see there's a couple of things. Potentially this little sort of channel that we're forming through here. We did get a little bit of a break from this point here. Look, I think with that stronger sort of jobs data overall throughout the week, I think that at best has probably put in a little bit of a, probably at worst, probably put in a little bit of a base for now. I'd expect this maybe possibly to sort of dribble up here. We'll have to sort of see how the market opens up sort of next week. As I saw, it's pretty quiet on the news front. There's not a lot of sort of drivers apart from the Fed minutes. But as I said, that's kind of, you already kind of really know what they're going to be saying on that stuff. So I think sort of we're just going to have to see how the price action evolves through the week. And there wasn't really a great deal, from many of the other major currencies or major banks either. So we're just going to have to sort of see what happens price action wise. But given the sort of the stronger numbers, the fact that they're, the whole sort of the fear mongering was, they're going to have to cut early, they're going to have to cut early. That really seems to have been abated with that stronger jobs numbers. You should expect this possibly at least to stabilize around here. As I said, I think sort of up around this level here, we've got a nice little support which gave that breakdown. It's got a nice little gap there as well. To me, that probably seems like a little bit of a reasonable sort of short-term target, so a little bit of a drift up towards there and that. Of course, I mean, look, you got to consider both sides of it and that. I think any move to the downside, 96.4s, I think we'll find another lot of buyers though. You could always see a quick fast down, fast up, but there doesn't really seem to be too many sort of catalysts to sort of to be pushing this thing. So I'm probably going to be still sticking in the camp of seeing at least a little bit of a drift up till we get a bit more of a picture of what's happening, sort of moving forward. Move along, we got gold. So gold, look, gold's a tough one at the moment because again, look, it was kind of quiet. It broke down after the NFP, came back up here and retested, and this is obviously a level that we've sort of seen the market react to and hold a number of times on both sides. It's been support, gets the old arrows out. It's been at support, 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 resistance, support, resistance. You know what I mean? It's danced around this line a lot. So while it's underneath, I would say it's probably sort of more in the camp of it possibly rolling over and coming down. But, it did break down, it bounced up, and it's trying to sort of get itself back up there. But obviously, look, it's a bit hard to tell because Friday didn't give us much. It was just quiet. So, look, I would probably put in, where's a little box thing going? Here's our little support with our where the buyers are holding. I think this is the area they need to hold. If you fail here, yeah, I'll probably be looking back around that 3280 to 3300 kind of zone. That'd be a nice little sort of confirmation. Close underneath here, actually. 3280 dash 3300. We can sort of see how this plays out. But I mean, it's really very choppy at the moment. And the thing that's making gold a little bit tough is this was a beautiful trade. Like this was the one that I sort of covered, and this is a $200 trade down to the bottom side here from the highs to the lows, and that as the sort of war was going on, 20 days or whatever it was. I think it was 15 days or something. Anyway, that was the sort of trade, and that was beautiful. Came down here, came back up to here to retest. It took out these highs, which made things a little bit difficult. It took out this falling resistance, which kind of made it a little bit difficult, and seems to be bouncing. So it seems to be respecting it a little bit on the top side of it all. So it's hard to sort of say because typically, if you were to say, okay, falling resistance, one, it's only got technically kind of two touches on there. I don't really count this wick here. You'd expect breakout, retest, boom, and then go on and go higher. Didn't do that. Obviously, sort of like NFP, bang, knocked it back down, and it kind of just dribbled out to the end of the week. So what I was saying last week, and which actually a note of that, I'm going to wipe one of my charts in that. I'm going to make one lot of these things weekly charts, and then I can revisit them because I've got too many charts that are going back and forth. But that's more just a note, more a note for myself than any sort of analysis. But where are we at? This is what I was sort of saying last week that potentially we were down. Where were we? Around here, was it 30th? Yeah, so we're around here or something last week. I was saying, hey, look, this could move back up here because we were looking at this sort of falling resistance area. This, I think 40 to 50, I think I called. And obviously we got the reaction there, but then really we just wobbled around a lot with it all. But as I said, if you're a bull on this in this particular move, as ugly as this right shoulder is, I mean, this is a pretty ugly left shoulder as well. That is kind of maybe technically kind of sort of setting itself up. We did have this line here that sort of seems to be lining up. To me, I'm not happy to trade that. I'm just saying that that is kind of technically what it would be. I think it works out well because it comes in with the same time of a failure of this sort of setup. So it would give you a breakdown down over here. But no, for me, I think it's really, I mean, look, let's do this. I think this is more what you're looking for. Yeah, this is well, what I'm looking for anyway. Everyone can do whatever they want. Little breakout box. That's what I'm kind of looking more for. I think it's had its chance. Little pullback to break here. It's tried. As long as it's underneath 46, and that was the note that I put yesterday with the analysis as well, that, above 46, you might see it squeeze up, and it came right up to it, right up to where we are at 45, and then sold back down. So it didn't quite get there, and then just sort of stuck around those sort of 30s into the end of the week. Let's have a look at this on a higher time frame. Yeah, look, again, I think this is going to give us a little direction here. Look, I mean, the RSI is sort of slowly twisting up here. It's very choppy. I mean, look at this. It's all up all over there. This was that 3 drive we were looking for. This backtest came higher than I would have liked, ideally. But I think early indicators are going to be above 60s, below, 20. And that's going to give us our direction. Little arrows here. This one here. That one there. I'm not happy to call that an inverted head and shoulders. I mean, look, technically it kind of is, but this bit just made things a bit ugly. You could say this is your little neckline here, but yeah, each their own on that one. All right, Aussie. And this is the thing that I was talking about with the Aussie. I put this big box around. I sort of said, look, yeah, this is where we wanted to see the 3 little price levels here. It kind of sort of tapped up 1, tapped up 2, and sort of ended the week slowly dribbling down, but it's still holding up above this main zone. Well, it closed in it, actually, technically, around that sort of 65-50 area. So look, you got to give it sort of credit for the fact that it's, got the effort to push up here, but it needed to capitalize. And this is what I was saying, that sort of like if this thing's going to sort of go bang, bang, and then sort of shoot up, 66 is what it needed to prove itself over. I've always said 90s is an area that you find resistance with Aussie, or it seems to resistance support. It always seems to play its part every time you're sort of popping through these handles. It's a fairly decent area that you're going to see a reaction for 20, 30 points at least, both directions. And as you can see, a couple of attempts into this here, and even this last attempt up here after the NFP, which was an incredible sort of comeback from it, it still was unable. And that's actually putting in a third sort of low high here, lower high. And we've got lower highs, lower lows. But again, the fact that it's holding above this bigger zone of this 55.50, which you can see was like, that's at 61% of October's drop down. It's got up here. You could say that it's still consolidating the top side over here. Yeah, I mean, it hasn't pulled back enough to sort of show that, okay, bang. And as you can see, every time it sort of sells down, bought back up, sells down, bought back up kind of thing. So look, I still think this is probably going to be a level to sort of see underneath 65.30 and then 65. I think they're the kind of levels that we're going to want to sort of see. If you're going to see this thing actually sort of cool off further, back down into say 64s, or back down towards 64 handle even, and say that this is, it's not so much that it's sort of like, because a failed breakout would be up, capture it, bang, smash it back down. But it hasn't really done that, and it's kind of gone up and it's just failing, excuse me, to sort of continue. And this is what I was saying, that if the market's so heavily priced in, like, and by priced in, it's just they know, like, it's a very high likelihood and acceptance that we're going to get a cut from the RBA this week. So what you may see is people sort of preemptively, get rid of their position, because typically you're going to see a weakening of a currency when they cut rates. If that is the case, if they're already sort of factoring that in, and it's still realistically at 3 month highs, well, actually, where are we actually at? This is going back to November. So technically yearly, we're yearly highs. Where did we start the year? Wow, down, down, down. So I mean, we're at yearly highs here. What am I talking about? This kind of thing. Like, bar this sort of little shakeout here. This is what I was thinking the other day. I mean, not much has really changed through the whole year. We got this little shakeout here. It's just been super choppy, up and down, up and down, up and down, up and down, up and down. Like, and it's gone insane. Yes, after April, like they had larger sort of swings here. This is kind of swap. This is on a daily, so this is kind of like sort of going back and forth literally every day. But as you can see, this here, it's worked so hard to sort of get back up above this level here, but it hasn't really capitalized on it and shot up over here. So, I mean, look, if it breaks 66, then you're probably looking up around 66.40, 66.80. Like, they're the kind of next levels that you're sort of looking just above. This level here and this level here. They're kind of where you're looking for above, give or take a couple of points. But as it is at the moment, look, it's overbought. Whoops. It's overbought. Didn't have a great day on the last day in the week, but as I said, look, you can't put too much stock into that because it was
quiet everywhere. Um, if this thing does sort of fail back down under these levels, you can see it a little bit more here. That sort of certainly, I think, it's sort of a move back under 65 will seal it for a deeper sort of pullback because this is kind of building to this sort of culmination, gets up here and then doesn't really do much with it. On the weekly, you might be able to see this as well a little bit more. That look, it sort of came up here, it had that big engulfing from last week, big sort of liquidity grab off the weekly supports, pushed out, and then it just hasn't really sort of carried it through. Look, it closed the week sort of with a bullish candle up 20 points or so from where it closed last week. Then where it closed at 30s, yep. And then so this week it's closed at 50. So it's 20 points that it sort of managed to actually capitalize on here. So look, I wouldn't say it's out, but this is screaming hot overbought. It's pushed out to this zone. It hasn't really sort of capitalized on it. So it's a question mark. Particularly as I said, with the RBA coming this week, if they've already priced it in and it's already up here, well, once you take alleviate, and the point with this is once you take away that sort of thing, like as in actually have the cut, that could alleviate that sort of pressure of like, oh, they're going to cut, they're going to cut, they're going to cut. Okay, now they've cut, that's fine, on with the show. So you could actually see things push up a little bit more based off that. Let's just see what Bullock has to sort of say. And if she gives us a bit more of an idea about what they're going to be doing towards the end of the year, because as I said, look, if you weigh the two up and you've got Aussie like the RBA and the Fed, well, the Fed obviously they pushed back July, so they're looking September. We're looking at three cuts pretty much almost sort of banked into this thing. It should be a little bit sort of on the weaker side of things, but the fact that it's quite resilient, it means they're buying it for some reason. I mean, commodities, yes, but as I said, I'll get to those in a moment because I think some of these are on their last legs as well. Last legs is probably actually a bit of a rich call, but you know what I mean. It could be sort of on the verge of seeing a little bit of a cooling off as well. So back onto something that's actually tradable. We'll sort of see, I think, sort of, as I said, opening up the week and that, you may actually see a little bit more downside once things resume. If we see, US dollar get bought up and drift up a little bit sort of throughout the week, that's going to put some pressure on the Aussie. RBA sort of coming up, look, it's on Tuesday, so you may see a little bit of sort of pairing of the positions just in preparation for that as well. So come earlier the week, I'd probably be looking to the downside. Wouldn't be expecting major sort of like drop offs or anything like this, but certainly I'm interested about this 65.30 level, where we sort of saw that bit of a bounce and a springboard off here in the bounce after the NFP. If you do break that, then we're down into this little wick territory, and I think a pretty quick move down towards 65, but I wouldn't expect underneath 65 prior to the RBA. Yeah, so I mean, look, pretty much still that same idea. 65 for the downside, 66 for the top side. Anywhere in here, you could see some support come in here. We could see this sort of little lower highs sort of take out here as well, but I think that's really going to give us our direction. So we've done gold, done Aussie, silver. How did that finish up? So slowly grinding higher. So like I said, sort of through this falling resistance, was the potential move in that. Obviously, downside if we got underneath that 65. So it seems to have sort of obviously broken out, back test, and again, end of the week, just dribbling, but it's drifting higher. So to me, it's kind of like again these big sort of consolidation boxes and that, and this seems to be sort of showing up a lot on the charts. And it's funny actually. Recently, I've sort of noticed a lot of I don't know if it's just maybe I'm viewing things through a certain lens. I doubt that, but it seems to be a lot of reoccurring patterns, mainly triangles. I'm seeing a lot of in the market. This is obviously broken out of this little area here and moving to the top side. But for instance, and that was then. I'm saying now you see this reoccurring kind of like consolidation periods that we're seeing, as I said, across with this like Aussie and that, and a couple of other sort of instruments as well. So once we get out of this box, I think this is what will give us our direction. So obviously moving up towards the top side here. So you could probably realistically expect a test of these levels here. This little red zone of this 37.50 and that's the wick highs of like 14 years. So this is like body fills. This is wick highs of I think I can't remember, maybe a weekly candle or something like this. Anyway, we're talking 14 years. So it's a fair area where we've seen wick rejections and that previously. It's up here. It's really just consolidating up here. It's been up here for a little while now. I mean, if you look at this here, and look, it's taken this whole time here. What it's done with these sort of things, it's burnt off this whole overbought. This is on the daily. Burnt off this whole overbought back down to oversold. Overbought. Yeah, went. Let me get my words out. Yeah, burnt off the overbought, back to oversold, turning up here as it starts to grind up here, which means basically one of two things. One, should this thing break out and run? Well, it's got a long room. It's got a lot of room that this RSI can really sort of follow up with it. Uh, Two is if it does fail from here, well, then you're going to put yourself into a big sort of negative divergence. So, for this to be so low here, I'm yeah, cautious about it. Again, I think the safe side of this thing is unless you've been long from these areas down here, which I'm not, and I haven't been trading silver at all, I'm going to wait for this box to break. I think there's too much of this sort of top side. I think this triangle's going to sort of come to play as well. That's pretty much a contact that I'm happy with. So, to me, that kind of says, okay, yeah, we're getting into the pinch end of this kind of thing here. And, I'd still like to sort of buy this thing down in the low 30s. I find it hard to believe that maybe that was it. That's silver's going 47 or whatever people are calling above there. But you know what? The recovery has been insane. But where's the pain trade? You've already sort of squeezed out all the sort of longs down here. All the people that wanted to short it through here, well, they've been squeezed out. Maybe they've just been sort of timed out basically in this kind of thing as well because it hasn't come back down. Is it better to sort of like squeeze it and just get all the people that are shorted from up here and just take them out, or is it better to sort of maybe come back down here, take out all these sort of longs that were through here, anybody that added their longs, and then run up here? Because of course that's what they're doing when they do this sort of stuff. It's been moving up the whole year, moving up the whole year, moving up the whole year. Do you keep sort of squeezing the people that got short from these areas here and then squeeze up here? No, the pain trade is to wipe out anybody that was long through this period here that's trying to hold it, got wiped out very quickly and reset and move again. So I think there's a higher likelihood that we actually do see a sort of pullback over here. And if we get back down to these 30, 31, 32 areas, I'd like to buy it. I think that's a pretty good area to buy. It's just, as I've said, the last week or 2 weeks or so, I just don't want to buy it up here. You know what I mean? There's trades in it, but there's better opportunities in the market, for me at least anyway. So I'll be watching for this one, but as I said, I think above 37.70, okay, you may see a bit of a move up. If you see this like sort of top side here, just shoot up over here. But I think to me, this is too much of a sort of confirming triangle. And I'd be wanting to see underneath the swing low. So underneath 35, I think is a better trade. That's 10% coming down, or thereabouts 10% coming back down into sort of the low 30s. I mean, depending on where you're taking it from, I suppose. But call that sort of move there, 8%, whatever. $3 move. I think that's a fairly decent little short side play, and then pick up some longs because you'll see a support coming in around here. Should this thing break out? Should this thing, sorry, play out like that? So that would be that's the whole recovery move. 61% comes in smack bang on 31.70. That's an area I'd be interested in buying it from. Copper. So copper is coming back to this box, and this is a good example, and this is what I was kind of alluding to before when I was like saying, oh, things on their legs. It's not, but as I said on Friday, Thursday and Friday as well, sort of like, I don't want to buy it up here because it's too, and let's move this back here a little bit. Like, this is the typical sort of thing. Let's get rid of this, clean it up, and show what I mean a bit more. This box, I'll reuse this. But there's a little point gone. This is what I'm saying, how you're seeing sort of triangles and things sort of poking out. You got lower highs, lower highs, lower highs, high lows, bubble. That's your triangle just there. That's fine. Breakout. People sort of go, oh, that's great. Breakout, got the breakout. Come back to your back test. Here we go, here we go. And no, back down. Shake them all out. Drag in the shorts because here's a failed breakout. What does it do then? Goes up again, goes even higher, takes out all those sort of stops, And this is what I was saying on Friday, that it's just getting to this point where, I don't know, it's either going to sort of break and absolutely run and take on, all-time highs, which are sort of up around here, so still a decent little whack up, or we're going to see this thing dribble back down here. And this is where I'm looking at, as I said, underneath this zone here. So that was the box that I put in. And as you can see, it's just really sort of come back down to the bottom side over here. So look, it hasn't broken through yet, but I think you got to keep in mind that sort of like, should this thing sort of continue early into the week and break through this 5 level, I think you could see a little bit of a cooling on these things. And this is what I was saying. Look, I mean, copper, I've been on the sideline, same as silver for a bit. And yeah, I've missed a little bit of it because I'm just cautious that we are going to see some deeper sort of shake with stuff. And even if we just take it from this little move up over here, we can sort of say, okay, where may it sort of want to come back to? Look, if it does sort of come through 5, nothing perfectly kind of lines up. I mean, if we took it from, that's lost where I put the base now. Okay, onto this little sort of pullback double bottom down here. So that's its last real drive up over here. If we actually drag this from the lows, does it give us anything else? Not really much. I mean, look, you can see that of this recovery, it still hasn't even got towards the 23%. So it's still incredibly bullish. Like, I'm not saying, okay, hey, the game's over. As you can see with all these arrows, I sort of thought, look, it's going to come down here. It shoots back up a lot. Excuse me. But maybe around this 38%, the bottom side of this is that little breakout level that we sort of had a few weeks ago. Maybe that could be a bit more of a sort of reasonable area, shake out a few and get long with it all. But certainly if we break through this little 5 level, I think maybe a move back to 480 could be sort of warranted. And we get a little bit of a move just down like this, at least, kind of thing. I mean, you got to evaluate how things are when it gets to this level here. So it's all very well to sort of pick these levels and say, hey, look, it's going to come to this thing. Everything is changing so much and so quickly at the moment. And I was trying to explain to somebody the other day that the reason it's so difficult to kind of sort of really trade these things and hold on to positions at the moment is because most recently we've been balancing all these different moving cogs of tariffs, of war, now the jobs numbers. I mean, look, these things are always, well, at least the jobs numbers and that, they're always sort of there. But, these things are sort of changing, every couple of days. And, then Trump's coming out and he's putting his nose into the whole idea of what's happening with Powell. All these sort of factors and that, you're trying to balance all these things out. So it's all very well, point I'm saying, it's all very well to sort of pick and say, hey, look, it's going to come down or it may come to this level here. But you got to look at what's happening as these things are coming in here. If it starts to come down here and then we sort of see something kick up with China or something, well, maybe that level won't hold and it'll go down even further. That's just an example. But, you got to sort of play these things very sort of like, be willing to sort of change the analysis within a couple of days. Because, just because it's coming down here now doesn't mean that, one, it doesn't even mean it's even going to break this level. But if it does break this level, you got to think, okay, these previous levels with the buyers, that may sort of offer a little bit of a back test area. I don't know. We'll see. It's very choppy through this zone here. But, for me, as I've said a couple of times on that, I just think it's a little bit sort of overcooked up here. I don't want to buy it up here, but I'd be willing to give it a shot and buy it down here. At least that reduces. And you can see the idea that you come back here and then maybe you can come back up to target these highs. But when you're already at the high, you got to expect a little bit of a pullback at some stage, which is what we've sort of seen. And, it's not drastic, but at the same time, that pullback from the highs there is also 3%, 3.5% in a couple of days. Well, actually, what's that from? Thursday. So in one session. So, these things can have these sort of deeper sort of pullbacks. Let's have a look at on the daily. How's it look? Yeah, as you can see, that's a bit more of a failed breakout kind of look. Tried to get above this zone. Failed, push back down, oversold, rolling over. I mean, should it sort of break through 5? Should it break through this sort of previous resistance zone here, which you never really retested? That's kind of the trade that you'd be looking for. And this is the thing that why, I mean, I don't trade copper as much as I trade sort of gold and, well, I haven't traded silver much recently, but as much as gold and silver. But it's a great proxy for Aussie. And this is the thing that's been holding Aussie up, that copper's been pushing up like this. So, if this starts to come off, equity's been pushing up, that's another sort of risk on mentality kind of thing. So, proxy for, risk for Aussie. If those things start to cool off, we could see a little bit of a pullback here. But again, look, these are the kind of levels 5, 4.6, and then 4.7. They're the kind of levels that I'd be looking at. These boxes. Buy zone down here. I'm not really interested till we get back down here. To me, that gives you 38%, which means you could get that nice sort of 38% springboard to the top there, shakes out a couple of longs, back down into a support area. I'd feel more comfortable buying around 4.7. And I think this is going to come down underneath 5 anyway, and I don't think this 4.96 is going to hold it. And finally, move along, we've got China. This is one that's really pinching at the moment. It keeps looking like it's about to go, but doesn't. Still negative divergence. We are seeing it attempt, and this is what I mean, like it looks like it's about to go, and then Friday, you got to almost disregard. I always say I disregard the last 4 hour candles of the week because, less people are at their desks. You can pretty much disregard, cut that off. Because it wasn't a day, like, what I mean? The US was all closed, and you saw most things just dribbled. So should this thing continue here, as we see, look, negative divergence into a wedge, this is potentially one of the more important charts, I think, more recently, because China is a big player. The yuan's been very strong ever since they sort of had that little breakout move up over here, which actually I find is an interesting sort of thing, because the way that this was kind of like a big range that it was in, obviously, for a while. So this was between November and, well, it popped out here and broke out, I suppose, the bottom side here through till May. But certainly it was a couple of months that it was kind of in this range, as you can see, bottom, top, bottom, top, bottom, top kind of thing, and then blew out the top here. So the thing is with ranges, and they have these failed breakouts, sometimes they do balance them. And if you see here, this is the size of the breakout that sort of obviously failed and came back down. Well, if you take this sort of size here and you paste it out the bottom here, that's pretty much exactly where it's kind of found support down over these other sort of horizontals here as well. So look, I wouldn't hang my hat on that and say that that is like, oh my God, here we go. But I would be sort of cautious about sort of moving this thing to the downside here. I think if you do come down here, look, you're coming into a pretty nice little confluence with this. It's funny, I've been trailing this price target up this line, well, probably maybe from more around here. As you can see, look, a number of times about to break down, and the reason I keep these markings on here, even though they were blatantly wrong, is for my own sort of factor of sort of like, I keep the ones on, these ones were 100% correct, that's fine. But I keep these ones on here just to remind me of sort of like so much of how the technicals can lead to something, and then obviously, no, bang, and it keeps moving, and it keeps moving, and it keeps moving. It keeps you realizing that, it's not all roses, and it's not always perfectly as the chart sort of shows, particularly with this sort of pair, because this is quite heavily sort of manipulated as well, this currency, and this is why you sort of see it grind a lot of the time. But as I said, look, this price target, should it break down here, well, you're coming into a fairly well marked out sort of support area. It is this larger rising support all the way through here. So should it come down here, I think you're going to find buys pretty quickly anyway. But as I said, it's a matter of sort of, does it sort of break down the side, or do we get this as a little bit more of a swing up here? I'm in the camp of this sort of actually moving to the top side over here. I've been saying it for the last couple of weeks going through this grind period here, because I thought it might have come up a little bit sooner, but we are getting to the tip of this little triangle here. So look, you could see another test down here. Certainly if you break this, okay, that's where you could be going, down to this price target. But this is kind of like, this is the number 2 option. Oh, whatever. Where's this? And this is number 1 option. This is what I'm sort of thinking. I think this is kind of more of where we're sort of heading. But should we break down under here? Well, I think this is obviously where we're going. And you see Aussie break out on this kind of thing. You see DXY sort of push down one more level there. But, I think there's a lot of sort of areas where you're going to find some pretty hefty sort of levels of support on DXY, on this sort of one as well. So I mean, as I said, this technical setup with a wedge coming off a support, negative divergence, I think this is probably going to see a little bit of a squeeze. So that's my number one sort of idea with it all. But of course, if this breaks down here, well, this is where it's going, and then you kind of look for any sort of counter trades from this lower level here. I'd be very surprised if it gets down here and then breaks through 710. I mean, I don't think the Chinese want a super strong yuan anyway. It doesn't make them overly sort of competitive. So, although they're not sort of like letting it go and sort of letting it move up like this, I think there's certainly reason for it to move back up into this sort of like, 724, 725, 726 kind of area, and then sort of maybe see what happens once we get up over into that zone there as well. All right, that's it from me.